Hello and welcome to this fingraphs.com podcast on Dukascopy TV. Today we're going to look at the cross-asset mix and try to understand if we could get a second round of reflation into the spring. We'll start an analysis with the US 10-year swap rate. We use the swap rate because we have intraday data on it instead of the benchmarks. It's very similar. What we can see is that the weekly graph on the US 10-year has been rising since last year. It is still a corrective move for now, but it's a well-engaged corrective move and it seems to want to move higher. Our view is that it probably makes it up to resistance, which is around 2% into the spring. In the meantime, the daily, after a consolidation which happened between late March and late July, early August, has been resuming its uptrend. We believe that it's getting towards a point of stress at the moment on our envelope, although the risk index is still quite low, and this could justify some intermediate consolidation. Our view is that the US 10-year could probably from late October consolidate for a few weeks down into November. The reason behind that, we believe, is probably that there's a lot of anticipation about tapering at the moment in the Fed. The initial announcement may jitter markets a bit and have the 10-year retrace slightly. We believe that, however, this fear will dissipate during November and that from mid-late November, the 10-year could start rising again. Shorter term, we've gotten to a point where we're quite overbought. Our envelopes are touching each other. We pretty much reached our targets and our risk index is also in the red. We may see a bit of continuation into late this month, but we do believe that at some point this exhaustion will turn into some consolidation. Now, it's also interesting to look at the shorter term rates, which are coming from a very, very low level. And this is the 2-year US swap rate, and it's coming up quite aggressively with these anticipations about tapering. The move is extremely aggressive and probably not quite finished yet. It is not in the overbought zone yet on our daily graphs. It's also very extended on our hourly graphs, but we believe it will probably hold. Our view is that short-term rates with this tapering anticipation, initial tapering announcements could hold up during November and probably better than the 10-year. This could lead to some slight flattening in the yield curve during November, which will then be reversed when the market gains enough confidence that inflationary and reflationary trends are still on the way up. The 2-year that holds quite well, while the 10-year retraces a bit during the November, and from mid-late November, the situation reverses. Now, this is interesting because we could put a parallel against Brent. Brent often drives inflation expectations, and we could see that Brent is in a very strong uptrend on our weekly graphs and that it's not overbought yet at all, and that we could see further upside potential into the spring. Our view is that over the next 4 to 6 months, Brent could reach $100 a barrel. If we look at the daily, however, we've gotten a bit ahead of ourselves. Our envelopes are touching each other. We reached our targets. Our risk index is close to the overbought zone. We believe that we may see some high-level consolidation during November, which could dim inflation expectations and in turn lead the 10-year to consolidate slightly. We could also see that the hourly is also quite extended at the moment. We've almost reached our impulsive 2 targets. We are almost in the overbought zone. So there's probably not much more to grab over the next few weeks, and we might see some consolidation into November. Thereafter, resume uptrend for mid-late November towards 100 into the spring. The S&P is a very similar story. It's overbought on our weekly graphs. It's pretty much reached its targets, but we believe it could still extend. It's a very strong uptrend into the spring, perhaps towards 4,800, 4,900. It's entered a consolidation here during September and early October. It's now attempting to retest up. We believe this period is all part of a flattish consolidation that could extend here probably into mid-late November. We're currently retesting up. There's probably a few more days to go, and then probably from late October, early November, probably another dip down into mid-late November, probably higher than the one we just saw, and then by mid-late November, a further move up quite strong into late Q1, perhaps the spring, and towards 4,800, 4,900. That leads us to other assets, for example, currencies and to the dollar. And what we could see, in a way, it's pretty much been following interest rates and all reflation, long-term US interest rates and all reflation rates higher. We think the main driver behind it could still be the mix between tapering anticipations and inflationary pressures. At the moment, there's a lot of focus on tapering. perhaps that inflationary pressures will take up the lead probably from mid-late November, we believe, and the euro could start at least rebound, perhaps rise again. We're not quite there yet. We in a correction down on the weekly. We're in an impulsive move down, but it's getting oversold on the daily. So we believe that we'll start building a base slowly between now and mid-late November. Still some risk towards 114 probably, but that's the most we see at the moment. So pretty much the high end of our targets here. And an initial reaction here, which is interesting. If we do make it above 117, that's a good break. But as said, we think there's a more digestions here, probably into mid-late November. Finally, we look at gold. Gold doesn't like rising interest rates, and especially short-term interest rates. It is not behaving that bad considering the environment. It is basically, in our view, also building a base. It's finishing off, we believe, a consolidation. There's still some risk here into November. We could already see the risk index is starting to move up and attempt to move up here. So maybe another month of patience. Maybe if there's strong sell-offs, you could start positioning yourself, but it's not quite there yet. And here also, from mid-late November, we believe that there's a resume uptrend situation. A nice little initial uptrend here, but it's having really trouble accelerating. So yeah, perhaps another month on gold, and then we resume the uptrend into the spring, following other reflationary assets, even if it's more defensive. And we believe that it could even retest up above 2,000 into over the next few months. Thank you very much and have a good week of trading.